Hi, I'm Bill Blain, strategist for Shard Capital, currently working from home. Today is May Day. It's traditionally the start of spring, maypoles, hedgerows, new fields, new life, and all that. But in more recent years, it's become very much a celebration of workers' rights. Under communism, May Day parades were all the rage, and still across Europe, you'll see May Day as a holiday for all workers. But May Day this year is a day that will see Karl Marx laughing his head off, rolling around his grave up in Highgate in North London. And what will have triggered his hysterical manic laughter? Well, it will be what's been going on in the US corporate bond market and with Boeing. Boeing is an object lesson in what has gone wrong over the last 20 years of capitalism. It's also a very good illustration that although the coronavirus has triggered this particular market depression, all the core reasons behind the severity of the crisis were there already. And I think it's going to be possible to draw a number of conclusions about what's happened. Anyway, what is it that's got me so angry about Boeing? Well, yesterday, Boeing was able to go to the bond market and raise an incredible 25 billion of finance across a number of different tranches. It did pay a fairly high interest rate for the borrowing, but that's still very good for a company that is facing enormous challenges. Let's be honest about what the challenges for Boeing are. Boeing faces a very different aviation market. All around the globe, we know that airlines have put some 60% of their aircraft into storage. The number of flights has dramatically fallen. Most airline executives think it could be years before we see air travel get back to the levels that it once was. At the same time, Boeing is scrabbling around trying to solve the Boeing 737 MAX problem. It's got over 5,000 aircraft on order, but the airplanes are still grounded because of last year's crashes. Boeing is also facing questions about how it's operated over the years. It was facing an enormous cash crisis because of the coronavirus, and it had gone to the government and asked for support. The government turned around and said, sure, we'll give you support, but strings attached. Instead, Boeing can now confidently go and say, we've demonstrated we can raise money in the market. We don't need government support. Well, that's maybe a bit of a get out for government. Government doesn't now face moral hazard in lending to Boeing. But the bond market, which has lent to Boeing, is guilty of enormous moral hazard. And let me explain why. And it's a long and slightly convoluted story. Everyone should of course be aware that Boeing is a great name in air transport. They build or built great airliners. Good example of that was the 737, the first short-haul regional jet. It opened up local travel. And then of course we had the jumbo jet. And between them and some of the other aircraft that Boeing introduced, we saw the rise of global tourism, local travel and business travel. Airlines innovated and were able to develop completely new strategies. I would argue that Boeing was pivotal to creating the whole global market. They made the world smaller and made it accessible to everybody. But back in the 1990s, Boeing made a fatal acquisition. They bought rival plane maker McDonnell Douglas, and the big joke in the aviation industry is that McDonnell Douglas bought Boeing using Boeing's money. Instead of Boeing being run by superb engineers who came up with great plane designs to fill airline niches, McDonnell Douglas was run by cost accountants. They very quickly changed the ethos of Boeing. They made every cent count. They counted the number of rivets. They concentrated on costs. The result was that over the years Boeing changed dramatically. Their last great airplane was the Dreamliner. That was an all-new design made of composite, lightweight materials. It was fuel efficient. Airlines loved it for that reason. Passengers loved it because it was a much more comfortable aircraft to fly on. It was fully pressurized, so you didn't come off the plane feeling dehydrated and exhausted. But it cost $25 billion to develop and get it launched. And that's a cost that Boeing will be paying for years. In fact, as Dreamliner orders have fallen off, it may even be that they never really made money on the project at all. But that didn't really worry the chief executives at Boeing. They were quite comfortable. As interest rates started to fall, they went into the bond market and started borrowing money. In fact, they borrowed an incredible amount of money. What did they do with it all? Well, they decided not to spend it on developing new aircraft. They didn't build or design a composite short-range freight plane to replace the 737. Instead, they used all their money to do stock buybacks. And what did that do? It sent the price of Boeing stock through the roof. It also meant that over the last couple of years, Boeing executives got paid over $1 billion in bonuses, and they also got enormous stock options. At the same time, Boeing was going around cost cutting. Workers were seeing their pay reduced and their hours increased. As a result, quality began to suffer across the whole group. In recent years, there have been stories about the US Air Force sending back Boeings because they found discarded tools in the wing spaces. And then, of course, we had the next issue, which was instead of building the new 737, Boeing simply extended the old one. Now, the original 737 was a real greyhound of the skies, a beautiful plane, a thoroughbred. By the time 50 years later it reached the Boeing 737 MAX stage, it had become a fat, lumbering, overweight cow, and safety had been compromised. 346 people paid the ultimate price for Boeing compromising safety, with 2 crashes last year. The plane remains grounded and the problems seem really difficult to solve. It's taking this long. But I'd argue that doesn't really matter because, let's face it, no passenger wants to find themselves on a Boeing 737 MAX, and airlines know that. They don't want to be using it. We are seeing orders being cancelled. We're also seeing some airlines rebrand the aircraft. No longer the MAX, it's an 800-200 series, according to one well-known Irish airline. But the bottom line is that Boeing has now been able to avoid going to the government and pleading for a bailout. Yet bond investors have come in and given it $25 billion, despite all the problems I've listed. Why is that? Well, it's really very, very simple. The bond market has completely arbitraged what they expect will happen. They know that Boeing is so significant and so important within the US military-industrial aerospace complex and has so many suppliers and jobs associated with it that no government is going to let it go down, especially when governments are spending so much money intervening to support the economy because of the coronavirus. And of course there's a second issue, which is that any bond investor jumping into that deal has an explicit put from the US Federal Reserve. Under its QE programs, the US Federal Reserve will buy any bonds issued by a company that was investment grade on March the 22nd, 2020. That means they can buy the entire Boeing bond issue if investors try to sell it to them. And that's a way out for any investor. Now, you would have thought that investors would have said, okay, we realise that, we quite like the yield, but Boeing has been a bad company and we do not want to have moral hazard. Well, yeah, certainly in the last few years, ESG, that is environmental, social and governance, has become a touchstone for all global investors. They don't want to be seen investing in people who are naughty or bad, which is why the oil industry and mining is suffering so much. Yet, yesterday we saw conclusively demonstrated by 25 billion that they're perfectly willing to go and bail out Boeing. And that's kind of sad. On this day when we're supposed to go and celebrate workers of the world, Karl Marx must be laughing at the collapse of communism, when the market and the collapse of capitalism, I meant to say, when the entire market expects that companies are too big to fail and that governments will intervene to save them. Where is the discipline of free markets? In any free market economy, companies that have so conclusively failed as Boeing has should be allowed to go bust and be replaced by something new and something better. Not any longer. It looks like capitalism has died, and it's all due not to coronavirus, but to what coronavirus has exposed as its underbelly.